It teased, it threatened, and then it did it. The rupee breached the 73 per dollar mark for the first time today. Remember, for a month now, the government has weighed in with statements and steps every time the dollar threatened to breach this mark. But today, the Indian currency couldn't be held back as it shot up all the way up to 73.42 early morning. It finally settled at the 73.34 mark for the day. So what's taking a toll on the rupee? Brent prices hovered around the $85 mark today, leading to huge outflows of cash. Crude oil prices remain firm on expectations of tighter markets once US sanctions target Iran's petroleum industry from the next month. Now, with the rupee testing new historic lows, the RBI has now stepped in. The central bank liberalised rules for oil companies to borrow from abroad. Let's go across to Lata Venkatesh to make sense of this. Lata, the rupee's toughening new lows. The RBI has made external borrowing easier for oil companies now with this liberalisation. What's your analysis?
After a gap of a day when markets opened to crude at 85, there was bound to be negative sentiment, and bang at the word go, you saw the dollar becoming as expensive as 73.30, then 73.42. What abetted the dollar buying was also the sell-off in equities that one witnessed in the last hour on Monday. It was 1,800 crore of FII selling of equities, and those custodial banks which sold the shares were buying dollars for their FII clients. But intervening news that RBI could open a window whereby oil companies can directly buy dollars from the Reserve Bank kept the dollar from rising too much, although that news was later denied. Because after market hours, the Reserve Bank has liberalized the rules, and now this makes it slightly cheaper for oil companies to borrow because they don't have to mandatorily hedge. Also, they can borrow on the automatic route from several kinds of sources. Earlier, the sources were restricted. Now, is this measure enough to remove the pressure of dollar buying? Yes, it is, because if these guys are going to borrow abroad, the immediate pressure in the domestic market declines. Now, this doesn't decline immediately because dealers say it's not easy to raise money in the bond market. Bond market spreads have gone very high. So these banks, these oil companies have to get into banking arrangements. That takes time. To arrange a foreign loan can take between 2 and 3 weeks. However, oil companies, in anticipation of those dollars, can sell forward dollars in the domestic market, right now, like tomorrow or day after, and that can bring down forward premia and soften the spot rupee. So the expectation is that, around the current levels, it should be controlled because the government is repeatedly showing resolve to open one window or another to keep the rupee from depreciating too much. But all that will help only if oil stabilizes at current levels and moves lower. If oil were to move at $2 a day like it did on Monday, then all bets are off.
Okay, so that volatility needs to be contained for that to happen. Lata, thanks for taking us through your perspective. But let's discuss this further. Joining in now is the Chairman and Managing Director of HPCL, M.K. Surana. Gopalan, the former Finance Secretary, is also joining in, and former Chairman of ONGC, R.S. Sharma, is also with us. Mr. Surana, let me come to you first. Do you believe that this will remove the pressure of dollar buying? And if yes, would you now increase buying from abroad?
I won't say that whether it will solve the problem permanently, but it will definitely give some calming effect to the dollar and the current volatility of the same.
So this will not solve the problem entirely. So by how much do you think this would help from an OMC perspective? And, when you look at this specifically, sir, from an HPCL point of view, how much of a relief does this mean for you?
No, the current window which has been given today, the liberalization is for the working capital of which oil companies used to take. Now, earlier, the working capital as per the RBI policy could be taken only from certain sources, and if at all it is taken, that was average certain minimum maturity period was there, it has to be hedged, etc. So today's new circular allows it to be taken from more than allowed sources earlier, and without a mandatory hedging requirement. So the companies will have more flexibility to decide their own strategy for the risk mitigation. And certain natural hedges which they may have, and the timing of taking the hedges. And to that extent, the companies will have more flexibility to manage their foreign currency requirements.
Mr. Surana, this will bring down hedging costs for you. Have you been able to tabulate by how much would hedging costs come down for you?
No, we'll look into it. I don't have the immediate answer to you to have done that because the circular has come only a few hours back. But it will definitely help in timing it more properly, and to that extent, it should help in reducing the hedging costs also, because when you are borrowing for a longer term dollar, the pressure on the immediate basis to hedge will not be there. Okay. And the hedging also, to that extent, push up the dollar to some extent.
Okay, let me bring Mr. Sharma into the conversation. Mr. Sharma, the central bank has waived off the $750 million cap that that the individual state-run refiners had earlier had imposed on them, and now the overall annual foreign currency borrowing under the new norms has been capped at $10 billion. Is this enough for boosting oil imports?
Look, Mr. Surana has explained, that he's the person who's actually, faced the situation. My own experience says, and another perspective which perhaps has not come out in the discussion, is that today there's a lot of pressure on the rupee in terms of exchange rate, and these oil marketing companies are the heaviest purchasers of the foreign exchange for their crude oil payments.
Yeah.
When they are able to borrow overseas, they will not be required to buy dollars in India to that extent, and they'll be able to use those funds, overseas borrowing funds, to pay for their oil imports. This is what I understand. Maybe Mr. Surana is online. He may be able to confirm that, but this is my perception that this is a way it will ease a lot of pressure on the exchange rate that rupee buying by these oil marketing companies.
Okay, Mr. Gopalan, come in on this point. Mr. Sharma believes that this will reduce the pressure of dollar buying. Mr. Surana is saying that yes, more moves are needed. What is your perspective? By how much would this ease the pressure that oil marketing companies have been facing right now?
Well, it's very difficult to say, but let me give a picture to you.
Sure.
See, last year we did about $140 billion of import, and this year likely to be $180 billion of import. So if ECB is likely to be for another $10 billion to help, possibly that $40 billion increase in import price, that cost, will be offset to some extent by this $10 billion limit, as I understand, on the ECB. Good thing is that probably, the government has 2 points have in mind. One is that the oil prices will come down in due course of time. It's not going to stay at this level. Second, the rupee will also not stay at this level. It will appreciate as we go along. So in a 3 to 5 year time frame, if government is able to set its house in order with exports being made more competitive on a number of areas, number of sectors, possibly the pressure on the exchange rate will go down. Maybe as Economic Affairs Secretary says, 68 to 70. If that happens in the next about 4 or 5 years or 3 years, or it goes even down further. Obviously, you buy now, you take a ECB now, and when you pay, the amount of rupees you spend on that will be less. So, this is on all optimistic situations, assumptions made. And these optimistic assumptions have to persist and continuously for the next 3 years at the time of repayment.
But Mr. Gopalan, would the overall cost of borrowing overseas bring down, and thereby, the pressure on OMCs at this point in time, like Mr. Surana was pointing out, do you believe that that pressure gets significantly eased, or more is required now?
Look, you cannot increase the ECB to a very high level. Okay, so the loans. Already the loans, if you look at the residual ratio of short-term debt to total debt is about 42. It has gone up from 39 to about 42 in the last 4 or 5 years. And obviously the short-term debt is piling up. So we need to see that, even the total debt is also increasing. Okay, so we need to see how we need to control our external debt. And we have been very successful. We have been very capable in handling this. It should not allow it to have a run. So I think that the $10 billion, as I understand, is a limit given.
Yeah.
It's a good step in the right direction. But
Okay.
when payment of that were to happen, when this is not hedged, suppose oil companies don't hedge it, the presumption will be that they will pay less with oil prices coming down, as well as the currency not staying at this level, appreciating to some extent. Then possibly there will be win-win for the oil companies.
Okay, Mr. Surana, would you have hoped for a higher cap of that $10 billion limit? Because you haven't seen that cap increasing from the $750 million mark for quite some time. Would you have preferred a higher cap? If yes, what amount? Because the fact of the matter is that almost close to 80% of crude is imported, and OMCs are, of course, the biggest consumers of dollars in the country.
No, the 750 million cap was for the automatic route for borrowing, and with the permission, we could have borrowed even higher. So, with the new circular, does away with that cap for OMCs. Now, the total limit which is given of 10 billion, that should be reasonably enough for us to manage our working capital requirement for all the three OMCs put together.
Okay, Mr. Surana, there was talk of a special swap window being introduced for OMCs, similar to what was introduced in 2013 when a significant slide, if not a similar slide, had been seen in the rupee. Do you still expect that to be considered by the government, or do you think that that special swap window is unlikely to happen with the ECB norms now being liberalized?
No, that swap window was there in 2013.
Yeah.
So this time the government has opened a different methodology for bringing in the dollars for meeting the working capital requirements of the oil companies. I am not sure whether that route is still being considered further. But let's see what is the impact of this particular liberalization, which is a good thing to do. At least it will help in reducing the volatility in the dollar market. And as Mr. Gopalan was mentioning, that if the dollar is appreciating in the future and if we are borrowing for 3 to 5 years, then it will be a good thing for the oil companies as well as for the government and as far as the economy.
Mr. Surana, what would your strategy be now? I understand that you'll have to go through the circular, but keeping volatility in mind, perhaps for the near term, we are expecting volatility to continue. Keeping that in mind, what would the strategy be and how will it change now?
No, as far as the working capital requirements are concerned, that are to be managed by the oil company. There is no doubt about it.
Exactly.
We are buying the crude which has been paid. So the question now will be that which is the better route to borrow, depending on the timing required for bond or syndicate or this thing we will see, and how best we can borrow at the most efficient manner.
Okay, last very short word to Mr. R.S. Sharma. Sir, do you also believe that the special swap window is unlikely to go through or not required at this point in time? And, you know, a point that a couple of dealers were telling us was that oil companies can now sell dollars forward and bring down spot rates in the near term at least. Would you agree to that?
I definitely feel that if that is allowed, that will ease pressure on the exchange rate further. Because oil marketing companies, instead of going to various banks for the purchase of dollars, if they are able to swap it directly from this RBI, that will be a step in the right direction. I feel that should be implemented without any delay.
Okay, fair enough. Thank you, gentlemen, for taking us through that detailed analysis. We will, of course, have to see the reaction on oil marketing companies in trade.